Hey guys, what's going on? Welcome back to another video. So first of all, I do want to apologize for me being not active in my YouTube channel. I've been, relatively extremely busy with paramedic school, being an actual EMT, doing 12 to 24-hour shifts and, running a business and stuff like that. So I hadn't had time to be able to create a video and upload it for you guys. So I do apologize for that. So I do want to just go over real quickly what's been going on with GoldenLevels recently. So we recently have developed and released a new algorithm for GoldenLevels, which is called GoldenLevels. So I'm going to be talking about GoldenLevels in this specific video. We're going to be talking about statistics, the entry criteria for GoldenLevels, and what makes it unique and different from our other algorithms. So without further ado, let's go ahead and get started. With GoldenLevels, we've really released it out for members as a demo-only version. And we have attended this specific version to be able to pass challenges at a very accurate rate compared to Morningstar. The thing is with Morningstar algorithm was not designed to pass challenges, right? It was designed based on my trading system called Collapsing EMA, and I've been trading that specific trading system for years now. So I decided to automate that specific system, and thus Morningstar algorithm was born. So with Morningstar, it has been able to pass challenges, it has been able to get members funded and make them money on their funded accounts. But I really wanted to create something that was more intended for, for passing challenges. Now, let me just explain to you guys that GoldenLevels is not a martingale. GoldenLevels is not a grid strategy. It is simply a robust, effective strategy that trades a specific system, right? So the thing is with a lot of algorithms nowadays that are, that are marketing out there to people that they can pass challenges, those specific algorithms are grid strategies and martingale, right? So, what are martingale grid strategies, right? So the risk of ruin on those specific algorithms are very high. You typically will see a very negative skewness on that specific algorithm. What does that mean? So that means essentially that their reward is much more smaller compared to the risk, right? So they're taking much more risk for little reward, and that could eventually bite them in their ass and blow the account because, again, nothing is predictable in the markets. You can create a model, you can create kind of an optimized algorithm based on the past results, but with the kurtosis risk, with the risk of ruin, you definitely have to be aware that the markets can do whatever they want, and especially in Forex and commodities, you have a big event that's happening, it could really destroy the kind of model that you created. It could really blow your account, it could really just give you extremely heavy drawdown, right? So what we design here in GoldenLevels is we design algorithms that are robust, effective, but making sure that it has an actual edge and it's not relatively focusing on one market type. We know that if it trades one market type and it changes, the market changes, if there's some kind of huge news event, we make sure that our algorithm is safe, effective, and does not blow the account. So all our algorithms have a relatively max drawdown between 10 to 30%, right? So that is relatively low risk, and you can even decrease your risk percentage per trade, and you can decrease your risk, your max drawdown from 30% to 10% to even 5%, right? So the thing is with MT4, one of the things I like about MT4 is that you can reduce your risk per trade. It's nothing like futures where you're only trading contracts, right? So here in GoldenLevels, we design algorithms that are effective, right? But they're not going to be as effective compared to grid strategies. They're not going to have a 90% win rate. Like you can see all these grid strategies like Titan X have a huge win percentage, right? But you do know that if it's winning in some couple of months, there's some months whenever the markets change where it's going to be losing really badly. And so, of course, I know that they have some kind of risk systems in that algorithm to protect itself. But again, I just want to explain to members that with those specific models, you definitely have to be very careful because of the negative skewness. And they're not going to work forever, right? So grid strategies are not going to work on every single market. It only works on specific markets that are counter trend. So gold is a very counter trend market right now. And that's why we've seen a lot of grid algorithms trade that specific gold market, right? But you do have to be extremely careful with that because the markets are always changing. There's always news events happening that's going to cause relatively, uneasiness, relatively different change of volatility, different change of market types, right? So, with our algorithms, they're robust, effective, and we make sure that if the market changes, we may get into drawdown, but we're not going to the algorithm is not going to blow the account, right? Because it's been robust, it's been effective to have risk management in place and being able to have a low risk of ruin. So let's go ahead and just show you guys GoldenLevels, right? So this is an optimized 24 months risk settings for GoldenLevels. So what I've done here is I've actually optimized over the last 24 months on GoldenLevels, and in using the specific settings that we've used here, we've been able to have a really good return. So you can see here, this is the actual back testing report. A very huge gains, the max drawdown of 23%. Right. So, with every back test, you definitely have to make sure that, you test multiple times on different kind of platforms to be assured. And I've been able to test it at different platforms to make sure that, the back test is relatively consistent throughout all the different platforms. So, this is, one of the back tests where, the back test ended up really well with a very low relative max drawdown. So, our max daily stop loss was set at 4.4%. Right, so essentially what that means is that whenever the trade goes into 4.4% drawdown on the specific day, it'll close out for the day and stop trading. Right, and the risk percentage that we use here was 0.8%. And why do we use 0.8%? We use it because we've optimized it throughout the last couple of 24 months, and we looked at the best risk to be able to pass challenges. Right, so we use we optimize these two parameters right over here, and that's how we were able to get these specific results. So, the win rate in profit was about 91%, right, which is pretty good. So what that means is that, with the specific months where the account did not pass the challenge but was in profit, was in the green, we counted that as a percentage and a win rate percentage because, again, you're not actually losing the challenge. And you're just basically going to get a reset on the next month. So we normalized that. And so, that was the actual win rate with the in profit. And then for the normalized win rate, which just means essentially taking out the in profit and just saying, okay, which specific months is it able to just pass that 10% challenge? And so, it was 79%, which is pretty good. The average drawdown per month was around 6.57%, which is honestly pretty good. And then the average drawdown from the previous version that we had with GoldenLevels that we released previously to the members, where it's around 8.92%. So with our risk systems that we've added, which is the max daily drawdown, we're able to reduce the drawdown very significantly, almost around 2%, right? So that's a really good significant difference right there. So 2.35. And then the standard deviation of the drawdown, which is essentially just saying what is the deviation, what is the mean of the drawdown, where it's a specific useful metric to know, okay, what kind of deviation can we expect on the drawdowns. And so we've been able to get a 3.21% within the last 24 months, which is honestly pretty good compared to the vanilla previous SD standard deviation, which was around 6.12%. So the difference is 2.91. So, the new optimized version has been able to, be very significant. And then you could see here, essentially, you could see the results: January fell, February pass, March pass, April, fell, May pass, June pass, June 22 pass. So, and then it shows you the drawdown here as well. And so we've created some charts for you guys, so you could kind of see the average drawdown per month. And it can kind of give you it can give you a perspective of which months could you expect the markets to be really kind of have a higher drawdown. And so you can see here that usually on June, July, you could see here November, December, we took a dip on the drawdown. January, November, December, January, we had a very big drawdown here around 14%, and then we went back up, and then we went back down to close to around 16%, right? So you can see here maybe around March, April, May, those are the months where you can typically see the most drawdowns of the specific system, right? So we took on the standard deviation of drawdown per month. So which months was the drawdown very deviated from the norm? So you can see here that April was a month where you typically saw a huge deviation from the average. on the drawdown, and then July was a typical month as well. So the deviation of drawdown could be a good thing and a bad thing, right? So more drawdown could be, bad for challenges, but more drawdown could also mean that you pass more challenges, right? So, but we typically want to keep or drawdown at a very minimum level, because again, you don't want to have more than a 5% drawdown on a day on a challenge, and you don't want to have more than a 10% drawdown on the account for that specific challenge. So we also went over the May, December best months for passes. So typically we charted out, it's like, okay, which months have been very consistent in being able to pass challenges, right? So you can see here, May, June, July, August, right? So, pretty significant right over here. 0.1 is 10% drawdown right over here. So you can see here that, within June, July, August, September, October, November, December, it was kind of relatively close to the 10%, but you can see that they were all relatively passes here. We also went over the, what is the difference between the optimized version and between the previous version. And it was a very significant difference in the drawdown, which is quite good, right? So we were able to keep, the win rate at a very kind of steady rate. The win rate for the vanilla, the previous version of GoldenLevels, was actually quite high, but, the drawdown was very significant, right? So that's why we added a bunch of risk systems to it. We actually released a new update for GoldenLevels, and this specific version has a news filter, right? So to actually stop trading during that specific news event, a very high impact news event, it'll close any trades as well. So we are additionally keep adding new risk systems for GoldenLevels to keep the drawdown at a relatively low rate, and being able to kind of optimize the settings to make it more effective over the long term. We're always kind of experimenting and seeing what is the best for GoldenLevels, and I'm excited to be able to further develop GoldenLevels and release it out to you guys. That is kind of the whole optimized settings right over here. I do want to go over just essentially the January, February, March. I added all the little back tests right over here. So you can see here, February 2022, we reached 10% with a max drawdown of 3.16%. Win rate was around 44%, and the profit factor was around 2.26, with the max trades being 18. So pretty good right over here. So I added all of these things so you guys can kind of take a look at, because I am a big believer in giving members all the data that they want. I went over all that for you guys, so you guys can check that out. So what I want to go over next is I want to go over kind of the way GoldenLevels works, right? So GoldenLevels is an algorithm that trades based off levels, right? So what kind of levels does GoldenLevels actually trade? So GoldenLevels trades specific levels that change every single day. It's based on a formula that takes advantage of the volatility, right? So the levels are always changing, and these specific levels have a very statistical significance compared to other support and resistance levels, right? So the algorithm does not trade every single day. It only trades maybe once a week, or maybe even twice every 2 or 3 times every single month, right? But within those levels, you typically see a very good win within those specific trades, right? So right over here, you can see here the market on the NASDAQ 100, which GoldenLevels only trades the NASDAQ 100, was starting to go down on May 12th, and we had like a little bit gap up and then gap down, and essentially we hit these levels. So these 2 levels right over here, we hit them. And so what GoldenLevels is once essentially it hits those specific levels, GoldenLevels will start placing trades, right? So these levels have a highly significant value area. So once we bounce off these levels, we will start placing trades. So you can see here that the market was essentially not being able to efficiently continue going down, right? So it basically went down here and continued going up, as you can see here. So typically if the market hits these levels, you could see very huge gains on the short term and long term, right? So right over here, just with this specific trade, it literally went up about maybe, let's just say 271 points, which is very significant, right? So from there, that specific entry, if we just take it from the high of day, it went through almost, let's just see, over 1,450 points, right? So Very powerful entries, right? And golden levels does not trade over the long term. I am experimenting with things like how can I transform golden levels into a swing trade and also a day trading system, trying to optimize the best for golden levels, because again, golden levels trades only on the long side, and so it'll be very beneficial to be able to have a specific system as well to trade the long side on the long term. Because again, you could really catch huge risk to rewards, right? The risk to rewards on average on golden levels is 5R, right? You can see here that, if you literally just place a trade with maybe a 15% or a 15 point stop loss, you could be able to get like maybe 20, 30R, right? So golden levels is a really powerful system. And again, we're always optimizing, for this specific version that I released out for the members, it's been really more of an ability to be able to pass challenges efficiently. And I think that's why I haven't been able to kind of maybe experiment with the swing side. But it is extremely powerful. So I am going to continue on working with that, because again, like just from that, if you literally just, take the full execution R right over here, like that is an amazing, powerful move, right? So, you're not going to always see like golden levels always trade those specific levels at a very accurate rate. Sometimes they'll take its sweet time, right? But statistically, usually if it bounces within those levels, you'll see a run up on the upside. So I do want to show you another example. So this entry happened on around May 15th. And so I'm going to go ahead and just show you guys another example. So this is another entry that happened on the 31st of May. So you can see here, golden levels was essentially jumping off right over here. So it was bouncing between these levels. It took, quite maybe a little bit of time, as you can see here. It kept bouncing up and down right over here. But whenever it hit that specific level, we saw a good massive run up toward the upside. And so golden levels actually took this trade, and so it was able to get a couple points toward the upside right over here. We went all the way back down, and then we were kind of chopping out as the market closed. It was continuously bouncing within those specific levels, as you can see here. And from there, it literally just continued going up toward the upside. And so that specific entry, from here to here, it generated around over 276 points, which is pretty good. And eventually it did go all the way back down, but as you can see here, it continued to bounce. So you can see here, these are the two levels that we're looking at for golden levels right over here. So this is one level right over here, and then this is the second level right over here. So you can see here that it went toward that level again, and eventually it bounced back up. The reason why golden levels didn't take this trade is because a new level generated on that specific day. And so, the old levels were kind of deleted, right? So new levels are always generated on the daily. So you're always going to have new levels, and, sometimes you're not going to, take the same trades as the previous levels of where golden levels place the trades. So yeah, that just kind of shows you kind of like the power of of golden levels right there. So from that specific level, you can see here that it went up around more than 600 points right over there. So yeah, these are just examples of golden levels and how it trades. The specific system is very effective, and I'm excited to have released it out to you guys and further improving this specific algorithm to be beneficial to you guys. So let's go ahead and just check out some stats, right? So I do want to go over some statistics for you guys. This is over the last 11 years of golden levels data. So we took 11 years of data, and I was able to put out some metrics for you guys. So you can see here the percent winnage is 16%, but the break even is 27%, that's why the profit percent trades is around 44%, because it's counting break even and win trades as well. So, very massive equity curve here. You can see here the consistent drawdown. So 2012, 2014 was a very kind of massive drawdown phase. We saw, a massive drawdown right over here. Eventually it receded all the way back up to all-time lows right over here. So very effective. This is the trade frequency. Typically over the last, 3 years, we've seen a very high volatility state. And that is the reason why we've been able to have multiple trades the last couple of years. More trades being taken on September and October, and as well as May as well. And then we have the probability density of consecutive wins and the probability density of consecutive losses, right? So, metrics for you guys to kind of just go over. I do want to go over like the full kind of metrics that we have here. So, we have the ROMAD, right? So the return over max drawdown ratio, which is 760%. And what that ratio is you divide the max drawdown between the return amount, and that is the amount that we got here. So the average RA here is actually kind of skewed right over here, so that has to do something with the metrics that I have here. But we have the profit factor, the normalized profit factor, the compound annual growth rate, the compound annual growth rate divided by max drawdown, which is really good, 2.15, which is exactly the range that I want to keep it at. The compound annual growth rate divided by the mean drawdown, which is 23, which is pretty good. We have the SQN score, which is the system quality number. These are just metrics for us quants here. And then we have the risk of ruin, very low risk of ruin, kurtosis returns as well. And then we have the win-loss ratio, we have the payout ratio, the expectancy. So this is actually a little bit skewed right but the payout ratio is 2.07, and then we have a little bit of skewed metrics right over here. I'll go over the quant analyzer in a second. And then we have the number of trades, which is very significant, over 6,000 trades within the last 11 years. We have the number of winning trades, the number of break-even trades. We have the months analyzed over 131 months. Years, so around 11 years essentially here. And then we have the max drawdown, which is 29%, and then the mean drawdown, which is 2.70%. So yeah, pretty cool stuff here. I do want to go over real quick the quant analyzer. So this is the quant analyzer metrics here. So from the same reports, you could see here that we've had relatively green months per year. 2012 is a red month, as you can see here. And that just had to do with kind of the market being very different back in 2012. Drawdown here, Sharpe ratio, profit factor, and then winning percentage. We have all the metrics here for you guys to kind of look at. And that's pretty much it, I think. Equity chart, trade analysis. You can see here the yearly returns here. This is all the metrics for you guys to take a look at. So yeah, that's pretty much it for this video. I just wanted to go over the metrics for you guys and going over the stat reports, because those are really important things to take a look at. I always tell all my members to definitely check out the stat reports and understand the system and how it works, because that'll give you the confidence to use that specific algorithm on your account and know that the specific algorithm is going through different kind of phases, and you just have to be patient and let it do its thing. If you guys also don't know, we're actually running a lifetime membership sale right now. So it's been over a while since I've actually had a lifetime membership sale, and so we've actually been able to kind of resume it for a limited time. So we only have around 10 slots open. So if you want to jump into lifetime memberships, you'll get access to Morningstar, UJ Ninja, Mechanical Levels, and as well as our new algorithm, GoldenLevels, the demo version, right? So the live version will not be released out to members, and that has to do with just systems mechanics. So yeah, definitely go ahead and check out our website and check out what we have here. We have a really good sale going on, and this is honestly one of the best sales that we've actually ever done here in Algo Labs. For the amount of work that I actually put into these algorithms, me and my quant team, it is actually extremely cheap right now at only $799 just to get a lifetime membership for 4 algorithms right over here. So it's extremely cheap right now, and we're only going to have limited spots available for you guys to kind of just jump in and just secure your spots. So definitely make sure to do that. And if you guys are wondering how to purchase a membership, you just go to the website and you go to the pricing plans, or you just click on become a lifetime member, and that'll just transition you to the pricing plans right over here. And then you could just go ahead and select the lifetime membership pass right over here as well. So yeah, definitely check that out. If you guys have any questions, please let me know. And I'm excited to be able to release new algorithms to you guys, to our community right over here, and to further develop new algorithms for you guys. Trying to make Algo Labs the best possible algorithm company out there for you guys. So yeah, thank you so much for watching. Let me know if you guys have any questions, and I'll see you guys in the next video.
It feels right, it feels right, yeah. I can only say that it feels right, it feels right, it feels right, yeah. I can only say that it feels right.